Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money on the internet. Load up for discussion today. We have Bitcoin stuck at around $112,000. MicroStrategy was not included in the S&P over the weekend, whilst Robinhood did enter on Friday. Hype is up 7%, pushing past $50 as the debate intensifies between Paxos, Frax, and Agora for the USDH stablecoin. Brad will be diving into what matters there, what you need to know, and why that is so significant. And then finally, Athena announced a couple of days ago over the weekend as well, a $530 million StablecoinX investment. That is also one of the tokens that is moving along with the other ones that make a ton of money. Hype, Pump, and Athena all moving very nicely. We'll discuss all at some point today. We've also got the latest on price action on crypto and NFTs as usual, plus a general discussion on how we think the market is moving. Today, I've got Legendary and Brett in the co-host seats with me. We're ready to get into it, but just a reminder, friends, before we do, nothing that we say here is financial advice. This market is very, very risky. We do not know anything for sure, so please do proceed with caution and exercise your own judgment. With that out of the way, Brett, it's Monday. It's the 8th of September. You weren't expecting that coming to you right away.
Suck it, Legendary. He came to me first. Yeah, man, things are good. Hot off the weekend. It was a busy weekend for me. We got a big drop coming today for the mega handle. Yeah, I want you guys to bookmark. Some of you guys, I've had the information out just because we do that, but it's exciting. We're ready for it. But it did nuke my Sunday. I did get to play a few board games. I played Dominion for the first time, which is like actually card game, not a board game, but did that with the neighbors. Had a good time. Did not get to do my portfolio revamp. I know we talked a little bit about that last week, even before the show. I was hoping to reposition a lot of stuff. Hype was in there. I was looking to do a little bit more pump allocation. I was looking to sell these NFTs that have been weighing me down. Although I'm pretty sure a token's coming for mine. So that's now giving me it's giving me a little bit of the icks. I want to hold on to those. So a lot of decisions on my side.
A lot of information there.
Yeah.
Card games sound good. Portfolio allocation, I also missed.
Would have sounded good,
but I think
we done it.
It would have been good had we done it. That's a Monday afternoon activity. So straight after the show today, or after a little bit, that's what I'll be doing. Maybe we'll do like a little open call, Brad, where we just
sit next to each other and hold each other accountable. Is that what
we'll join in on a Zoom call and just everyone manage their portfolio at the same time? Yep. Maybe we'll circulate a link.
Accountability buddy.
Exactly. Maybe we'll do that. Otherwise, Ledge, how are things at your side? How was your weekend? You ready for this week? People, did you get hit with all this AI doomerism over the weekend as well?
No. What happened? What AI doomerism? What did I miss?
Everyone just got super depressed, from what I could tell on the timeline, that AI is going to take everything and the world is screwed and the dollar is worthless and et cetera, et cetera.
I think the complete opposite. I feel like trust in humans is gone. We are completely dog shit at governing the world and our planet. And if anything, AI is the only thing that can save us from ourselves. I wanted to make this post on the weekend. Either we'll have civil war in Europe at some point, or we'll have AGI first, and AGI is going to save us. And I hope it's going to be AGI and not civil war.
Interesting. That would be an interesting perspective to articulate. I don't know if I entirely agree with that one. I think humans are flawed, but I think we got some redeeming qualities. I hope we do anyway. But yeah, that was an interesting arc I think we went through a bit, and then the timeline and then the prices started moving straight out of that doomerism. So that was an interesting thing. But we're going to be talking about the prices and everything else to do with the market in today's show. So let's start to get into it, because we've got a lot to talk about today. Starting with the main price action as usual, we've got Bitcoin flat at 100, and let me check. I want to say 112, but if it's not 112, I can't say 112. It is not 112. It's 111,000. ETH is flat at 4.3K. XRP is up almost 4%, almost back to $3. So technically, that is the best performing major. BNB is flat to 876. Solana is up 5% actually to $214. So that's a nice big move there, probably on the back of the news that I think there is a new digital asset treasury company which has raised 1.5 bill. But we're going to touch on that a little bit later. Did someone want to come in there?
Yeah, it's been a lot of back and forth on those. I haven't totally caught up. I just know that people are flipping confused on these Solana DATs and how they are constructed, because there is some nuance around whether or not they're locked tokens. I know we covered it previously. It's not all DATs, but it is some of them. Yes, like that. Like I've seen a lot of consternation on the timeline, a lot of bickering back and forth of like some proclaiming that, oh, it doesn't matter, there's no buy pressure, and then people coming back and arguing with them that they're dumb. So who knows what's real anymore?
This will feed into another conversation we're going to have later, where it just feels very unfamiliar. Like crypto's got weird. Like we're trying to do all this analysis on things that we don't have a great handle on. However, the positive thing about it is that we should just be able to find out. Like we should just be able to read the documents and it should tell us. So let's just do that at some point in time in the assets that we're invested in.
I mean, fuck, we have AI now, right? Like that's shit. Get the document, throw AI at it, and say like, are these guys buying anything? Done.
Exactly.
You don't have to legalese it yourself.
So just a quick point on that, which is probably partly to do with the Solana move. This was announced 1 hour ago. Forward Industries announces $1.65 billion private placement in cash and stablecoin commitments, led by Galaxy Digital, Jump Crypto, and Multicoin Capital. I believe there is some locked tokens in this as well. I don't want to say that for sure. Maybe we're going to do a bit of reading live during the show because it only came out not long ago. But it does specifically say here cash and stablecoin commitments. So there should be some new money going in, but we're going to circle back to that in just a little bit.
Just like some DATs were like asking people that were contributing tokens saying you have to match it 1-to-1, right? It's like if you contribute $1 million worth of Solana locked tokens, you have to contribute $1 million in cash alongside it so that we can use that to purchase things. So like that's some of the nuance.
Yeah. So let's, as we said, let's do the reading. Let's just read the documents and see what it says. Hyperliquid is up 7%. As I said, pushed past $50 now. Let's see if it holds up there. It's been past there a couple of times and has always dipped back down. Let's see there. And you've got Sui. Where's Sui gone? Sui's up a couple of percent to almost $3.50 as well. On the meme coin side of things looking pretty green as well. Doge's up 7% to 23 cents. Pepe's up just a couple of percent. Pengu's up almost 13%. So that's one of the bigger movers. Got Bonk up 7% as well. SPX is up 13%. WIF is up just a couple of percent. Fartcoin's up 8%. So in general, Rector's up 4% as well. In general, single digit green, I would say more or less, with some of the favorite coins maybe up double digits, meaning SPX up double digits.
Pump's cresting 5 billies.
Pump is also up 4%, almost on the 5 bill mark, up 40% on the week.
I tell you what, man. So I think this, people in the crowd, like, welcome to my brain. I feel like I get like disproportionately burned by losses. Like the pain of losing $1 for me is so much greater than the joy of winning $1 that like, it's hard. Like I can trade, bro. I picked out Pump. I was on the hype train. Like I read the narratives. I do all this stuff. It's just like, I don't I don't buy because I don't care, because like every now and then I'll go and fucking buy Boop and Boop will fucking wreck me. And then I'm like, this game sucks and I'll go home. But like, I could do this, man. I just like, I don't care about it. Like, yeah, I fucking pick this stuff. For the last 2 weeks, I've been harping this shit. Just buy a bigger size and I'm doing great. Same thing with hype. Like, yeah.
Great call. Well, I mean, we'll get into hype a little bit more as well, because there was some prominent positions taken, I think, in the last couple of days on the back of this stablecoin stuff. So really, really looking forward to your section on that to explain why people think that's so significant. So that's the meme coin side of things. Getting into the headlines themselves, which we're going to discuss today. As we said, we've got Bitcoin. We're going to do a general outlook. Again, Legendary is going to take that. Bitcoin around 111. MicroStrategy not including S&P as well, and Robinhood entered into it. So we'll just reflect on that. which happened, I think, on Friday. Hype up 7% to $50. Athena announced $530 million StablecoinX investment. I'll explain what that means towards the end of the show. Notable price action. Big moves across the board. Collector Crypt Cards is up another 28% to 540 mil FDV, very much tying into the collectible RWA meta, which is going on at the moment. People are super excited about that. Somnia, one of the prominent chains who we've worked with in the past, up 40% to 1.6 bill FTV. Well done to them. That looks quite encouraging. Pengu's up 8% as well, or a bit more than that now. WorldCoin was also moved 24% today to 12 bill FTV. Ledge, is there anything we need to see on the NFT side? Anything that you noticed?
Got a nice Fidenza sale for 32.69 ETH, which we're sharing on screen. And apart from that, the main thing to point out is that Pudgy Penguins are moving up. They're up 3%, back above a 10 ETH floor, 10.25 to be precise. However, still massively lagging behind the move that we saw in the Pengu token.
Interesting. Okay, well, good to know on that side. I have felt in the NFT side of things, it's kind of it's definitely, I feel like it's kind of cooled after there was that huge run on Moonbirds, huge run on Punks, huge run on Squiggle. Like everything had a huge run at the exact same time, and then it's just cooled since then. So now it's kind of figuring out what direction it wants to go in. In terms of the rest of the roundup, we had the ETH L2 Kinto shutting down after July's $1.5 million exploit. We had Athena announcing a strategic investment in Based One, Hyperliquid's largest builder codes platform by revenue. I'm super intrigued by this. I need to check Based One out. Apparently they represent 7% of all builder code revenue. I believe, although I need to double check, that's why I need to research more. You can kind of, it allows you to customize your own exchange in some way. So like you can, if I understood correctly from the very small amount I've thought, we could have like a modern market exchange done through Based One, and then it's just like a builder codes thing. I think whatever it is, there's been a couple of high signal people who have brought it across my attention now, and it's enough for me to want to get involved.
Yeah, they're crushing right now. They're like just this last day, September 5th, they were 53% of revenue from builder codes. Now it's not a lot. Like these numbers are like, even with 53% represented, it was $54 or $54,000. Sorry, not 54,000. So like
that's
not
good.
gargantuan. That's revenue by the builder. So the volume may be way higher, but like that's the revenue that they've generated.
Got it. Okay. Good context. Definitely want to check it out though. And Athena thinking that it's worthy of a strategic investment also makes it interesting to me. In other news, Metaplanet bought another $50 million of Bitcoin. And finally, this happened late on Friday. I think Wildcat raised $3.5 million in the seed extension round to grow under collateralized lending market. I do think that's something to keep an eye on. A little bit more on the risky side for parking your stables. But I've just noticed again, some smart people talking about that arena. And I think that could be valuable at some point. So that is that. I feel like the news this week today was a little bit contracted in terms of quantity, but the significance I think was pretty high. So before we get into the rest of the stuff, Ledge, is there anything there catching your attention or anything else that I might have missed that you've been thinking about considering in the last couple of days?
Kind of the connection between Wildcat and Kinto, because didn't Kinto have a lending pool going on Wildcat after the exploit that they had in July, and people did lend them like 750K. That was supposed to return, I don't know, like 25-ish%, but now they're not getting that capital back. They're getting, I think, 76 cents on the dollar back. So
interesting. That is really, really interesting. I didn't know.
Have you guys talked about Wildcat?
We have previously, but do you want to say something about it?
Yeah, I mean, just like context for people who may have come lately. So Wildcat is a new protocol. It's like Function Zero is the prominent CT person who represents it. It's been uncollateralized entirely loans, just brought on chain. Wildcat is a platform. Like what they do is they vet the people that are making the request, and then it is up to the participant to say, hey, whether or not like the risk is worth the reward, right? And so what you're doing is you are like Kinto, for instance. Kinto had a Black Swan hack event where they owed a lot of money, or they're trying to make users whole after someone had exploited them. they came to Wildcat and said, I'm a legit entity. Wildcat signed off, said, yes, they're a legit entity. They whatever. And they said, this is the loan terms we're trying to get. You give us $750,000, like Legendary said. We'll give you.
It was 50%. I was understating it, by the way. It was 50% APR, and it was for 1 month.
Yeah. So like, obviously that's appealing if you're willing to take on the risk, understanding that it's uncollateralized. So like, there's nothing that Wildcat or the protocol can do, like if they default on that loan, to actually like make you whole, right? Like if they, or even save you, like it's totally, they could have gave back zero in this instance. Kinto took that loan, and obviously it's now going to perform to the downside because they just shut up, or they closed their doors, right? So now they're not going to pay fully back with all that. They probably use some of those funds to like close some of their other holes, or like make everyone up to like that 80% window, and then like now they're just going away.
But I mean, ultimately, I don't think that's a bad outcome. Again, they get like back 76 cents on the dollar, and that's the risk.
For something so risky,
could have been a zero. Yeah.
APR could have been zero. Like you lend someone money uncollateralized, they pay an insane APR. If it works out, good on you. If not, obviously that's, nobody pays you 50% APR for not taking any sort of risk. So I feel like that's a good outcome. It didn't get the outrage on the timeline. It's not a scam. Everyone did know the situation. They got hacked. They're like in a fucking shitty situation, and they either can like turn it around. And if they can, you make 50%, an APR 50% of that, or you can't, and then you won't get all of your money back.
Yeah, 25% downside on 50% APRs, not bad. But then I also think for only 1 month, is it worth it? I would probably decline it still. If it was going to be 25% downside, which by the way is not something that they wrote down, right? 25% downside, you can't know in advance. Yeah. If that's the calculation that you made and it was going to be 50% APR for multiple months, then that would get me kind of intrigued. But for 1 month only, I probably would decline. Brad?
Yeah, it makes me think. I was just having flashbacks. Like, that upside, because the downside truly was zero, like getting zeroed out for these.
Yeah, exactly. That's the true downside that in advance of pressing the button.
Yep.
Yeah. So it was giving me flashbacks of the USDC trade DPEG, where it's like, oh, sick, I can buy USDC at 80 cents, and then it'll probably peg back to $1, and I make 20%. And then like after doing it in retrospect, I was like, dude, it could have zeroed out. Like, why would you would move in size for something for only like a capped 20% gain, and then like potentially zeros? And it's like, oh man.
Just so people get a sense of,
it can be worth it, right? I mean, that's the article that you have ready to get into by Farm Rick. We'll go into similar discussion with the GBTC trade. So
yeah,
at some point that risk reward might be worth it, and it's probably a better thing than. There's this age-old YouTube video. I think it's like 16 years old or so, by this guy who took his entire life savings to Vegas and bet it all on roulette, like on red or black, and he actually doubled up his money. And it took like a very long time to find a casino who's even willing that, because everyone's telling gamble responsibly, and there's like this young kid showing up with, I don't know, was it 50K, 100K, whatever, to double that up. So I think which is less than a 50% chance, but taking 20% on the USDC DPEG, like a high likelihood. Still wouldn't want to be all in that trade, but do it with a more significant exposure than usual.
Just one thing for people intrigued by Wildcat, and then Ledge, maybe you take us into that article, which we read over the weekend and shared in our Telegram group because we thought it was helpful. The other side of it is, okay, you get this like arguably very short-term risky loan. You also get people like Wintermute coming to the table saying, we're going to give you 16% on stables for an undefined period of time, and you can ask for your money back as long as you give us, I think it's 48 hours to give it back to you. So that's one that I'm doing, for example, and I've been doing that for ages because I just think, okay, giving money to Wintermute is probably okay. They don't need to give me anything for that. They don't need to collateralize. So I'm trying out the protocol, seeing how that works, and that was an example where I feel that's certainly a more secure part on the spectrum than the Kinto example, which you just described. So just sharing that there's like some nuance to the scale even as well. But Ledge, unless you want to come back on that, do you want to just talk us through this other article we were kind of circulating between ourselves?
Yeah, absolutely. And it is this article, which I'm going to bring up on screen, by Farmer Rick, which is headlined "How to Make 6 to 7 Figures Farming 12 Protocols / Projects on Hyperliquid and Hyper EVM in 2025." And the key thing here is that Farmeric is making the claim that even if you have a 4 to 5 figure portfolio, you can use strategies that will make you surpass the volume, / activity of 6 to 7 figure portfolios, like Farmeric did back in the day. And he's looking at a couple different categories in this article. First of which being basically decentralized perp exchanges in itself. Obviously Hyperliquid, but also Hibachi extended, and Lighter. Lighter, interesting one. I remember like the first time I got onto Lighter was months and months and months ago, and everyone was saying, yeah, not worth it. Hyperliquid is the main thing. And now it feels like there's a push on the timeline to get more volume and get more stuff done on Lighter. So that is interesting in how the setup always changes. And I feel like that would be my addition to the article before I go through the rest of it. And when you hear of something just because nobody's talking about it and people are rejecting it, if you can explore that, and if it's an early Lighter thing, if it's an early whatever protocol, it might be worth it, because talking about airdrops, there's a lot of protocols that are applying an additional weight on doing early activity, early volume on something versus joining a bit later. So going back to that, he goes to the question, how do we accumulate big volume for big points without losing capital? Obviously, that is to do with delta neutral volume farming with leverage, making the example of bridging funds over to Hyperliquid, deposit that to at least 2 different dexes. Lighter has 0 fees, Hibachi has 0.02, Taker is 0 maker for August. And if you're trying to profit, you can use tools like Loristo tools, which is pretty cool, to arbitrage. So basically, it's just telling you what to buy on what exchange and what to sell on another exchange, profit from the price difference. So the idea here is you're long on one exchange, you're short on the other exchange, you're not taking any directional risk, and you're getting volume done on both those exchanges. Also coming up with an example, you have a 5K stack on each exchange, you're long 35,000 of Sui on Lighter, that is a 7x leverage, and you're short that same amount with the same leverage on another exchange, in this case extended. So you use 10K and generate $70,000 worth of volume in a single trade. The goal that he sets for that is to aim for $1 million in volume per week per exchange. And then he goes on into some protocols. I'm not going to dive into all of them. But the next thing he touches on is yield farming and swaps. One of the protocols he touches on is Project X, unsurprisingly, and different approaches that you can take to that. So either have a wide range between a liquidity pair, that means you will accept price fluctuations on both sides to a stronger extent, which typically lowers the APR, but doesn't does lower the risk of basically running out of one token in the token pair. So being single-sided in pump and hype, and pump is increasing massively over how hype is pumping, and then you would basically sell out of pump and sell into hype, and at one point you would be out of range and you would only be 100% in hype. So you can set a wider range and forget that, but have a lower APR, but then lower your time and effort to manage that, or you can go with a tighter range. Then you have to manage more actively, because also earn a higher yield. He goes into more detail into explaining exactly those things here. And then finally, the section on lending, borrowing, and looping. That includes Felix protocol, which we talked about on the show. We also had the norm for an interview, Hyperlend, Hyperfi, as well as Kinetic for staked hype. And then I think I'm just gonna get a bit short on the last things. Stables and unit farming, something we also spoke about quite a lot, and also about ways on how to combine that. Unit obviously being that protocol that brings tokens like ETH as unit ETH, UBTC, UPump to Hyperliquid in the native form, and how you can get exposure to those. There's also ways to combine those things. You can provide, as we said, liquidity for unit pump and or unit BTC and unit ETH on Felix, and get both exposure to using unit assets as well as lending on Project X, farming yield there, earning that points as well. So you can combine those categories and do 3 or 4 in 1 strategies as well. It is a long read. It also touches on some more things like liminal, which we also had mentioned previously. And I think it is worthwhile to explore under that lens that just because you have a smaller portfolio doesn't mean that you can get serious volume done. I mean, even if you have a big portfolio, like CBB does, CBB is the number 1 farmer, or number 2 farmer on Project X. And he's mostly, or they're mostly doing that via swaps and doing like millions and millions in volume of swaps. So they're doing probably hundreds of millions, and obviously not using 100 million every time they're trading around because the liquidity would not even support that. So the idea kind of is to be more active and putting your capital to work as efficiently as you can without risking any directional risk and losing it on one side of the bet.
I like it. And I think one of the reasons that's so helpful, to think about that is so helpful, is because if you are thinking with some imagination and directionally, hype is increasing in price and value as the market is becoming more bullish on it, you would like to think that it is not a huge leap to think that the protocols who are building on hype should increase in value at the same time. I do accept that Hyperliquid's kind of different in the way that the core app kind of controls so much of the value, like so much of the value and so much of the money is created by the core app. And so it's not quite the same as other situations, I think, where, okay, because Hypercore is so valuable, therefore any protocol building on Hyperliquid will be valuable. I do not think that is the case, but I do think that strategically speaking, and I think the article does a good job of identifying some of those, it could be helpful. One of the other things, Ledge, I don't know if you read his other article that shared just a few days ago, was on the risk-taking side, and I thought that was really helpful to share as well, because it just reflected on the way to get, I think in his case, it was something to 7 figures or something, without blowing up. And I think, I don't know, I think in this industry, or in our industry, it's like almost glorified to blow up, and it's fun to hear a story of someone blowing up and then coming back and blowing up and then making more and blowing up, you know, going back and forth between these two. But it really resonated with me because I certainly have not blown up, touch wood, not yet, at least. I don't intend to, obviously, but it just shows it was a really well articulated strategy and approach to trying to quote unquote make it without blowing up. And it shows that you really don't need to in this space. Like, you don't need to. Of course, if you want to go faster, put on more risk and then you run the risk a bit more. But it was just a very well articulated post on how to do very, very well in this industry without putting on the risk that's going to cripple you. So did you see that, Ledge? Do you have any reflections there before we move into the kind of main conversation today?
I did. I think a couple of things there. Even if you go slow in crypto, that's still way faster than outside of crypto.
Exactly.
That is one point. But then still, I feel like you can take higher risk without blowing up your portfolio. Like, you can go into a very early, I don't know, meme coin play or whatever it is, and have a significant upside from that, especially for smaller portfolios, but not blow everything up in one trade. Like, you know, if you have a 5-figure portfolio, you could easily, in the meme coin season, you could easily go to a 6-figure portfolio, but you didn't need to put, not easily is maybe, you would have a way better chance than anywhere else to go to 6 figures during meme coin season, but without having to put 10K into one meme and hope that 10X. So you can even do the very risky stuff without blowing up your portfolio.
Agree. Funky, your hand is raised. Welcome to the stage, my man. How did you want to contribute on this kind of conversation of building wealth in the industry and risk taking?
First and foremost, I just wanted to thank you, B, because I saw Farmer Rick's article thanks to your post, and I even quote posted myself. I loved the article. It was a really great write-up. The one thing that I lamented when I read it was, I think I've said to you guys before on the show that GBTC was something I bought when the MNAV was really, really down and depressed, like in the bear market. And I thought that was one of the most intriguing parts of his whole story, where he basically he sold everything on chain, went all off chain, and just doubled down on GBTC, knowing that that MNAV window was going to close. I mean, talk about a genius move, effectively buying Bitcoin like 2 for 1.
And I just gave him a lot of props for that, because I mean, I did buy pretty good size, but not anything like that. I wish I had liquidated the whole portfolio and just gone to GBTC like he did, but kudos to him.
Yeah, and this I think is actually how we're probably developing Ledge. I don't know if you'd agree, but like our style is, well, my style is probably developing into fewer trades over time, and just entering in bigger quantity, and just kind of slightly fewer. Now, I think the reason why I think that is because the market more recently has lent itself to that. If November 2020, if November 2020, what year is it? Oh my God. If November 2024 comes around again, no, what year? It's 2025, isn't it?
You're
This
right.
time,
November
yes.
2024 comes around again, then let's see, maybe you recognize the moment and then you trade a little bit faster, right? But I think in general, that's where my style is moving towards, like find hype, buy a ton of it, keep buying it over again, and then wait for it to go up. And then do things on the
So
EVM.
easy. Why didn't we just do that? Like, we should have been doing that from the start.
We did.
Find the
did.
thing, buy big, and just let it go up.
Yeah, there you go. That's
strategy
Go
is
on,
just, buy low, sell high with
Yeah.
with a higher portfolio allocation to that trade.
yeah, and do that with 100% of your money, and then you've doubled it at least. Okay, so interesting reflections there. Let's get into this other stuff today, though, because some, as I said, maybe a bit fewer news around the way, but important news. So let's go to you first for this roundup on Bitcoin and MicroStrategy, and then we'll get into the big hype stablecoin conversation with Bread just after.
Absolutely, yeah. So the main headline here is the strategy did not get added to the S&P 500 index. It did meet all criteria to be included. As a result of that, the stock did fall a couple percent on Friday. It's currently trading at 300, or was trading at 335 at close on Friday. It's down a couple more percent of the pre-market, trading at $327. On the other hand, unexpectedly, Robinhood got added to the S&P 500, and it did go up on 7% as a result of that. And I thought the interesting thing here is to try to understand a bit how the S&P 500 works, because I feel like that's not something that necessarily is common knowledge. And there was this post by our favorite analyst at Bloomberg, ETF analyst Eric Balkunas, who said, why wasn't strategy allowed into the S&P 500 index despite meeting all the criteria? Because the quote-unquote committee said, no, you have to realize that the SPX is essentially an active fund run by a secret committee, and they invited the dude who used to run this committee on their podcast. So I did go to the S&P 500 website to look that up, how the index governance works, and there is an explainer which I'm currently sharing on screen. I'm going to zoom in a bit more. There we go. An index committee maintains the indices. All committee members are full-time professional members of the S&P Dow Jones Indices staff. The committee meets monthly. At each meeting, the index committee reviews pending corporate actions that may affect index constituents, statistics comparing the composition of indices to the market, companies that are being considered as candidates for addition to an index, and any significant market events. Then they also go on to say, obviously, that all these discussions are confidential, and that they reserve the right to themselves to make exceptions when applying the methodology if the need arises. In any scenario where the treatment differs from the general rules stated in this document or supplemental documents, clients will receive sufficient notice whenever possible. So that just goes to say that, yes, there are formal criteria to be included, but it's not governed by an algorithm where basically if you meet those that set of criteria, you will be included. There is a manual review. There is a committee which also can deviate from the criteria, which we've seen happening with strategy, which we've also seen happening with Tesla in the past. So it's not the first time that has happened, and it is exactly how it is supposed to work, basically. So yes, sure, disappointing from strategy's perspective and affected the stock price, but there's no ill or wrongdoing going on here. Just wanted to clarify on that.
Appreciate it. So that's like the core information, although Funky put me on to a whole part of, I don't know if it's close enough to call it micro. It's big enough to call it MicroStrategy Twitter. You know, there's kind of Bitcoin Twitter, the maxis, and I think there is a cult around Saylor as well and MicroStrategy. And there's been a huge amount of dissent recently. Remember, I think it was 10 days ago, 14 days ago, when they changed some of their rules and to allow them to sell shares to buy Bitcoin. And there's been huge dissent. Like, I think amongst some of the early believers and investors, that the change that was made has really made them lose trust in what strategy is intending to do. So I would just want to bring Funky up here, because I feel like everyone else is, people have just assumed that MicroStrategy is different. I'm open to that idea, but in this industry, I'm also concerned at all times with all of the big actors at any point in time for anything that starts to suggest that things are not as they seem, because we've been through that multiple times. So Funky, I want to bring you up here to speak to some of the concern going on around strategy and what you've been either hearing or reading or thinking.
Yeah, thanks, B. I actually read a lot about this over the weekend, and I'll just start off by prefacing everything else I'm about to say. That am I a Saylor fan? Yes. Am I a MicroStrategy holder? Yes. Am I shaken a little bit by some of this stuff that's happened over the last few weeks? Also, yes. I think that the biggest reason for what I read over the weekend that the S&P did not include strategy is that they feel as if this committee, whoever they may be, right, do not believe that strategy is playing by the traditional playbook. When you think about most equities, right, and Brett's talked about this before, you guys have talked about this, MicroStrategy as a software business solutions company does not make a whole lot of money. A few $100 million a year. It's effectively become a Bitcoin treasury strategy company. And so when you're not generating real revenue in the same way that most businesses do, because when you think about the criteria that need to be met in order for inclusion in the S&P 500, apparently that's why the committee balked. Because the value, one of the checkboxes is that you reach a certain market cap value for your company. And they feel that strategy, and Saylor in particular, has inflated this in a way by effectively selling out shareholders, because they're continually diluting the shareholder base by offering, granted, we had the spurt of the different financial products like Strife and Strike and all those others. But at the end of the day, most of the Bitcoin buys have resulted from ATM offerings of the actual equity and diluting the shareholders. Now, this has worked for a few years, right? Like, I mean, I bought in MicroStrategy in 2020 when Saylor first said, like, we're going to buy Bitcoin. I thought, okay, let's buy some of this company, because they were the first DAT, if you will, and sort of created the blueprint for all this. But I think in recent weeks, to your point, after the earnings call, where I was very excited, oh, hey, we're only going to offer this once the MNAV hits 4, and then to back off that like a week later and say, no, we're still going to tactically deploy ATM offerings to generate more funds for buying Bitcoin. It has inflated the value of MicroStrategy. It has inflated his own net worth, because, I mean, he owns a massive tranche of the stock itself on top of his original Bitcoin buy, where he bought like 16,000 Bitcoins or something back in 2020. So I totally understand why people are concerned. Am I still holding my strategy? Yes. I'm not going to ditch it. I think that the market still has some time to run, right? Infinite institutional bread, as Brett would say. But I do feel that this is a cause for concern. I do wish also selfishly that it had been included in the S&P 500, because then it would have bolstered the price, because, as you know, anybody of those are managing those funds for ETFs, they have to go and buy the shares. They have to include it in their offering as part of the S&P 500. So I'm curious to see if this gets resolved, because I brought this up on the show before. They did this famously to Tesla for a long time, where they didn't want to include Tesla in the S&P 500. So I think that it will eventually come to bear, because, I mean, how long can you meet the criteria but be told no? But I think that there's genuine cause for concern by many of the people, and there has been a lot of dissent from the people who were just undying, unflinching Saylor fans are now kind of, oh, wait a minute, this does seem very Ponzi-esque at this point.
Very interesting to reflect on. Appreciate the provision of the other side there, Funky. as both a holder and like trying to articulate the skeptical argument. And just so people know, in 40 minutes ago, Strategy acquired another $217 million worth of Bitcoin at 111,000 per Bitcoin. So the buys are continuing, even still. So look, we've got other things to talk about today. I'm not coming down on either side of this. It's something I need to actually do a little bit more reading on. But Ledge or Brad, do you guys have any specific take, any specific read on the strategy stuff? I don't think either of you are holders. Does it concern you at all? Are you thinking about it at all? No?
I mean, just like in a macro perspective, like I as Funky said, I want them to get at the S&P 500 because it's bullish for all of us in the industry, right? Whenever you have that systemic buy pressure from all these funds that have to have X% allocation to the S&P, right? Like all these managed assets. So like that's good for us. But outside of that, no, I don't have specific strategy exposure, and most of my stuff is just straight up ETF. So I'm devoid of that.
Got it. Ledge, any view?
It concerns me from the overall market perspective. Obviously, if people were at large to lose faith in what all those stats and especially MicroStrategy or Strategy and Michael Saylor are doing, that wouldn't be a good outcome. On the other hand, and this is why it was important to me to point that out, and Funky did double down on that, it's not the first time that has happened. Like Elon faced the same thing with Tesla. It took them quite a while until they got included, and they were included in the end. So I remain hopeful that if Strategy continues to fulfill those criteria over the next couple of months, that at some point they will be included. Just to put it in perspective, Tesla fulfilled these criteria back in July 2020, and it took them until November to be included in the S&P 500. So basically a bit shorter than half a year that this was going on, which is, all things considered, yes, annoying, but it's also not like an exaggerated period of time. It's long, but it's not like infinite.
Okay. Monitoring that situation, I think, is the conclusion there, I think, for us. Brad, let's get into the probably biggest conversation of the day from the last 48 hours. And I love that Hyperliquid have done this to compress the amount of time that everyone has for decision making here. They've obviously suggested that the USDH ticker on Hyperliquid is now available. What does that mean? What is going on as a consequence? Who is vying for this ticker, and what's the significance?
Yeah, it was pretty hard not to see this over the weekend. Hyperliquid late last week announced that they were reserving the USDH ticker. And for people who aren't familiar with how the Hyperliquid system works, like they're constantly selling tickers to eventually be imported into the Hyperliquid perps, like our Hyperliquid core application. So they made an announcement in their Discord. This is like their aura is pretty high these days. They don't even have to make a Twitter post anymore. They just put a post inside of their Discord and said, "We just reserved USDH. We will now listen to bids on who wants to like manage the ticker for us and like have it represent a Hyperliquid native stablecoin." That kicked off a frenzy. Since that day, you have now seen a bunch of large players across the industry who have had experience with stablecoins step in to place bids on how they would steward the USDH ticker, what their specific package would be. You have key names like Paxos, Frax, Agora. Athena teased it with a tweet. You saw USDC respond with, it wasn't about the USDH, but it was like their own little thing. They tried to say that they reserve their own ticker. It was kind of a mid-curve take. Or mid-curve response, I'll say. And all of these people are stepping forward to say, look, man, we will run the stablecoin, we will own the ticker, we will manage all the backend. We have all of these other products that will make our specific thing better. There's actually another group called Native Markets, which is sprung up from within the Hyperliquid ecosystem. Max Fagey, I think is how you pronounce his name, who is famously familiar with the Hype D DAT we had talked about previously. He had some familiarity there. They've spun up a proposal from within the ecosystem. And the notable thing here is, one, just like the fervor and the level of competition from all of these key players across the industry stepping in to support and like try to get exposure to the ecosystem, because again, Hyperliquid is the killer app right now, right? They're generating nearly $1 billion in revenue. So everyone wants to have exposure and be deeper entrenched in this growing sector. And then the second thing that I would say is notable is that a lot of them are furthering the Hyperliquid ethos, we'll call it. And when I say that, I mean buybacks is what's in vogue for them, right? And basically all of them are competing to say how much they are going to go contribute the proceeds of whatever it is that they run for the USDH ticker into buybacks for hype, right? Just straight up, like between 95 and 100% is usually like the range that I'm seeing. So if you were to take the stablecoin levels that are being used for this inside of Hyperliquid, right? I think there's something like $3 billion worth. I don't have the numbers with me right now. 5 billion maybe. In TVO, that's like on Arbitrum and USDC. The long-term outcome would be that, 5.5 billion. So remember, this is how Tether makes all of their money, right? So Tether owns Circle, right? They own the stablecoin. You as users get no yield, and on the back end they capture a marginal percent of that, 7%, 8%, whatever it is, something conservative but good. And that's why Tether is making $1 gajillion. Hyperliquid, which is quickly growing and now has $5.5 billion in USDC, eventually would convert all this stuff to USDH and then capture the yield. And that yield would then go back to apparently buybacks. So that's, an additional, I think I've seen figures of like 250 million a year that would go. So then you're going from 1 billion to 1.25 billion per year in hype buybacks from this ecosystem. And that's without growth, right? Like assuming it continues to grow, that number only goes up, right? So it largely is just like, one, the excitement is up. It is palpable amongst all these big players. The deadline is Tuesday, tomorrow. So that's like when we'll know, we'll know all the players that have submitted. I don't know when the actual decision will come. And it should come from, I believe, the validators, of which the foundation themselves are abstaining from voting. That was interesting. I saw Kinetic is actually, they said they're going to delegate all their funds to the foundation so that it is up to purely the validators, and it's not like a heavy-handed thing from the foundation or them. So that's the TLDR. It's potentially a lot of money coming back to hype buybacks starting as early as, I don't know, whenever that is. I imagine it'd take a little bit to get spun up and get like approved and all this stuff, but we should know a decision on who's at least submitting by end of tomorrow.
Indeed. Amazing summary. Really, really helpful summary to get us up to speed with what's going on there. As you say, probably the inspiration, or the what is the word? Not the inspiration, the catalyst for the upside, the price action here on hype, which has pushed past $50 because of what you just outlined, which is the fees being pushed directly back to hype, which is kind of the Hyperliquid ethos, isn't it? It's like, if you make money, just keep buying back the token.
It is the expectation of the ecosystem. Now, I don't know how long that will survive, right? Eventually, like, people, like, it erodes a little bit as systems grow. Like, that's just normal, right? That it's hard to stay totally of one mind with that. And but like right now, it's very strong, and it's the expectation of the ecosystem with most of these apps that are being launched, and with this big stuff like this. You should be aligned, and aligned means buying the token.
I like this point by Traffy in the YouTube comments. First time I saw a governance discussion on this level where institutional players are talking to the community and getting pushed into the ethos. I think that's so right? Like governance is usually so boring. No one cares. Yeah. Suddenly these huge institutions are there, and like the community are bullying them on Twitter, like saying what they've got to do.
Bro, not even on Twitter. So like I saw a picture of the Agora team, right? So Agora is a team that is, I think, funded by Van Eck. Van Eck is notoriously called Hyperliquid and L3 because of all of these funds that are on Arbitrum. We can debate this technical structure. I don't agree with that, but like whatever. And the way that they have to submit a proposal is through the governance channel inside of Discord. And so you see these large institutional players in there, like checking their ranks and like, hey, do I have permissions to this channel and do this? Like these big, huge people just diminish this other stuff. And then you have people who have obviously been in the ecosystem for a long time, probably have pretty good Discord roles and ranks. We're just dunking on these people, just like these, because they can't do it. So they just call them retarded and having fun with it.
It is
rank
significant role reversal. Ledge, before we hit the final headline, very curious for your take here. We do need to spend a couple more minutes. I think, like, what are the implications of this move? What do you like about it? What do you not like anything about it? What are your thoughts?
I did react surprised to the fact, which Brett had mentioned, which is that the foundation is abstaining on their own votes, which I quite like, which is quite powerful to say that they don't want to have.
I mean, they got a shitload of, like, they're delegating all this. They have a shit ton of tokens still. So, like, they have an outsized power, obviously, still.
Plus, obviously, if they were to support someone vocally and say, hey, we're going to vote for that, like, chances are that most of the people will just fall in line and it's going to be pushed through. So it's, like, pretty powerful to not do that, and kind of, especially when it comes to something that's so important. Like, Brett perfectly explained why this matters from an economic perspective and why you want someone to take over the native stablecoin who just has the best proposal ultimately, because it's going to be so relevant for the amount of buybacks and for the whole, like, economic value of Hyperliquid as a token. And then to still abstain on that is probably the most powerful sign of trust in DAOs that we've seen so far, because we've seen a lot of DAOs where, and the foundation says, nah, we're gonna vote and we obviously have the largest stake, or we're gonna shut the DAO down because we don't think the direction is going into it. We're gonna input the first proposal and vote it through ourselves. Like, all of these things we've seen happening, and here it's actually truly decentralized and the foundation is abstaining. So that was the most impressive thing about that.
Well, it's decentralized in that, like, they approve the validators, so it's like they're homies, and it's Jeff and nine pictures of Jeff on the picture.
Still, but it's like, of course, maybe I'm like overselling the utopia, but it's still way better than what could have been, right?
Yeah, and I think the thing that is brilliant here, or genius, or maybe why it is important to, like, identify the culture of the different ecosystems, right? We talk about this stuff being cults, all this stuff as a religion, whatever, and it is important for the foundation to set the tone for culture, expectations, whatever, and then to get the community to then be reverberating, echoing that same thing, because then the expectation of the ecosystem is to move a certain way. And in instances like this, right, like, if Hyperliquid did not have a strong culture within its ecosystem and expectations, they would have to manage all of this stuff. They would have to launch their own stablecoin. They would have to do their stuff. They would have to implement the fee structure. They would have to do all this shit. But because they have created a product that's really good and they're inviting people into their home, the culture in their home is that you do this thing, right? So all of these people that are stepping in to lift all of this workload off of Hyperliquid to add utility to the ecosystem now are coming to the table and implementing it basically in the same way that Hyperliquid would have had they done it themselves, right? So now they don't have to do all the work. They just do a fucking Discord post, and then they go, all these large players that are capable of doing it step in, and they do what Hyperliquid would have done anyways, which is buy back the token, which is, they have a shit ton of, like, that's what they want. Now other people are spending time, energy, money, growing their ecosystem and buying their tokens off them. So it's that's important. Like, had they not set that cultural understanding early on with their own stuff and, like, repeated it and trying to, like, create these values, then that may not have happened. People come in, they run it, like, USDC just, like, supports the chain, Tether just supports the chain, but they don't do it in the way that Tether or Hyperliquid would have, and then it kind of erodes, does its own thing. But it's directionally how Hyperliquid would have.
Yeah, and if you think about that, like, compared to a traditional company, compared, say, to them on the market real quick, right? It's, BJEC and myself, we founded this. Now we got you on board, we got Drew as the editor, et cetera, and we were to face, like, an important business decision, and then BJEC and I go, okay, we'll let you guys decide. Yes, we selected the people who we work with, and we're not going to have a say in that. It's probably not how we're going to do it. We will include Aaron in the discussion, but we will also include ourselves in the discussion. So it is more decentralized than a typical business. But yeah, I was probably overselling the utopia a bit.
Yeah, a few interesting other points. Conscious of time here, we've got a couple more things to do. A few interesting notes. This was by the founder of Felix, who made a reasonable point, which is that some Hyperliquid community members seem to be discounting is that the hard work on USDH doesn't begin with the ticker proposal setup, it only begins after. There are new benefits in place to complement the launch of a new quote asset for Hyperliquid markets like HIP3, fee reduction of spot quote asset swaps. But unseating USDC will be far from automatic. You already have USDHL, which is one of the stablecoins on Hyperliquid. It already buys Hype with 100% of fees generated and then distributes 100% of that hype to users. So that is already an option available to people on Hyperliquid. I think I still have a little bit of that one. You can get it via, well, you can just swap for it. And so that does already exist. So it's not necessarily the case. I think it's just pointing out that, look, this is not, this is not some home run necessarily. It's just important to bring up. And then a couple of other things I thought was interesting is Traffy in the YouTube comments reading my mind. We had the CEO of Circle actually come out and respond by saying the following. He said, "Don't believe the hype. We are coming to the hype ecosystem in a big way. We intend to be a major player and contributors to the ecosystem. Happy to see others purchase new USD tickers and compete. Hyperfast native USDC with deep and nearly instant cross-chain interoperability will be well received." And interestingly, Shoku, very well respected builder and investor, very prominent on the Hyperliquid ecosystem, said, "Just fast and native, probably not good enough anymore." Which I think speaks to all of these buybacks.
Indicating, yeah, you got to give us the yield, bitch. That's what he's saying.
That's the translation. Yeah. Correct.
Yeah, Circle had already acquired, or they're planning to acquire USDC as the ticker inside of the Hyperliquid ecosystem, and then deploy their own stuff. But again, unless it's like aligned, right? Unless they bend the knee, like the ecosystem is going to reject it, frankly. So it doesn't matter.
Final take I wanted to, so I agree with that. Final take I wanted to share. There's so much going on about this. I think this is clearly the biggest news. And then I want to touch on one final thing today. Mike Dudas, who's been crushing all of his investments on the kind of venture side, said, "We've backed up the truck and loaded up on hype at 6-man ventures this weekend is a clear indicator that the Hyperliquid ecosystem is ready for liftoff." Ledge, coming to you here, because I think maybe me and you have been in this trade for the longest. To what extent do you think this is confirmation of something which is going to continue for a while, versus just kind of something that's going to potentially peter out as we get towards, I don't know, some mania phase towards the end of this year, which some people are kind of suggesting?
I mean, it's not the first time hype hit $50, and it did hit it in absence of that news, right? So now that it hit $50 with that news, I would argue that the full effect of that is not priced in yet. As concerns timeline, end of year or not, that also ultimately depends on when they will start implementing that, which I don't know. But I don't think that if this goes through with a very good proposal, which I assume it will, that it's too late for the hype trade.
You think it is too late, or it's not too late?
I don't think it's too late for the hype trade.
I agree. One of the, maybe just a broader reflection, one of the nice things about part of this cycle is that hype is a good product. It makes a ton of money. If you buy it, it goes up. Pump Fun is a good product, whether you agree with like some of the underlying dynamics of meme coin trading. Like, it makes money, it has revenue, it buys its token back, it therefore goes up. Obviously, there was a big dip initially because there were so many sellers because of the structure of the ICO sale. But like, I'm kind of encouraged that maybe for one of the first times in crypto, you can just buy high quality revenue generating protocols, and then the price just goes up. And so it gives you kind of an option to invest in a way that maybe you haven't had to before, where everything's been pure speculation or pure infrastructure, potential future growth story. So I'm just very, very encouraged by that. It makes you feel far more comfortable in the hold, I think. So for me, I'm going to keep I'm going to let go a little bit. I told someone the other day, every time I see something really stupid in the industry, I'm going to just sell a bit. So like, I don't know, last week or maybe the week before, something around the World Liberty 5 situation I just thought was really dumb, and then I just sold a bit. And maybe I'm going to keep doing that. If we are about to go into some like real mania phase, and even if it's hype, which I think is amazing, you want to keep locking in the next level of life that you've managed to gain because of the good entry points that you've had. And if I keep seeing ridiculously stupid things that makes me think we're getting overheated, then I might take 5% and just sell. Something like that is how I'm thinking about it. Ledge, any thought on that strategy?
Yeah, I like it because it just gives you a reason to regularly take profits because stupid shit happens all the time in crypto. So it's a good strategy.
Okay. Good stuff. Look, I'm conscious we are over time. I just want to put this one on your radar because it is interesting, because digital asset treasury companies are all the rage all the time now. The final headline for today was, and this did happen a couple of days ago. I wasn't on the show on Friday though. StablecoinX has announced an additional $530 million capital raise as part of its ENA accumulation strategy. That's obviously the token for Athena. We've been talking about the revenue generating protocols. Hyperliquid, Athena, and Pump are doing beautifully. Their token prices are reflecting that. They said that StablecoinX has raised a total of approximately $895 million in PIPE financing, which is expected to result in a vehicle with over 3 billion ENA tokens on its balance sheet at closing. Just for context, this is in addition to the initial PIPE financing, which resulted in the acquisition of approximately 7.3% of circulating total supply over the last 6 weeks. An important note is that the Athena Foundation has the right to veto any sales of Athena by StablecoinX at its sole discretion. Now, look, one of the reasons I was talking to Ledge before the show about why this cycle is getting a bit complicated and confusing is because we're dealing with entities and structures that we're not super familiar with. And so it's incumbent on us in the end to try to get familiar with it. And I think we still need to do more in that direction. But one of the key differences in this entity compared with some of the other entities is that here we go. So here we say, to the extent StablecoinX subsequently raises capital with the intent of purchasing additional locked ENA from the Athena Foundation, cash proceeds from these token sales are planned to use to purchase spot Athena. This is the crucial distinction between this structure and some of the other structures. If you put locked tokens into the structure, then there has to be there basically has to be cash for it to be like for there to be some net buying pressure. And we went through this on the show the other day where Guy, the founder, talked through the difference between some of the way some of the Solana structures were designed. It looks like, although we need to do more reading, it looks like the Solana structures are not going to be able to move forward in the way where it's just all locked tokens. So I think it's going to be cleaner and better for that reason. So we'll look for confirmation on that. Obviously, you had a big one today announced with 1.65 billion from a couple of the big firms. So we'll keep an eye on that. And just a final point from Guy to explain the numbers here. The raise of $530 million represents roughly 14% of the circulating market cap of Athena. To put that into perspective, the raise is the equivalent of Saylor raising 300 billion to buy Bitcoin, Tom Lee raising 75 billion to buy ETH, and 2x the circulating supply purchase with cash in the last raise. And they have a veto right on any ENA sales by StablecoinX. So look, I think knowing some of these details in a lot of detail is super important to trying to understand the flow of capital moving forward for your favorite tokens. It is no longer a game of just looking at the market cap and circulating supply and knowing when VC unlocks are. Like, that was the game for a while, and determining crypto Twitter sentiment, that is not the game anymore. You've got to understand some of these structures. So Ledge, just coming to you here as we close the show for the day. Do you have a view on this? Do you find this interesting as it relates specifically to Athena, or any broader thoughts on the DAT ecosystem?
I do find it quite interesting. You know me very well for the fact that I never got into the Athena trade, which is probably one of the most contrasting things when it comes to both of our portfolios, because other than that, they are to a certain extent pretty similar, right? But this in particular made me intrigued to finally get onto the ENA trade. So I do think that more generally speaking, even understanding a bit more, or not only a bit more, like understanding profoundly how different DATs work and how they will operate and where the funds are going to go and when things are going to get purchased and what kind of tokens are going to be purchased from whatever market participant will be very, very relevant for this cycle to trade.
Yeah, I feel like this one, the way it's designed, is widely perceived as one of the better ones. That is my general sense from doing the reading that I've done. But as I said, got to keep an eye on it. We have run over today. We hope that was an interesting discussion to start off the week. Not as much news today, but very important one. So glad we could get through it with you guys. Thanks so much to Legendary and Bread for co-hosting with me. Bread just had to drop at a hard stop. Thanks for Funky for his contributions. As always, thank you so much for joining us. As always, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour live on X video and YouTube. And you can catch us on Apple and Spotify podcasts too. Have a wonderful day. Take care. We'll be back same time, same place tomorrow. See you later. Bye-bye.